AP, New York. Before a week full of potentially market-moving events, including decisions on interest rates around the world and earnings reports from the biggest U.S. firms, stocks are sliding on Wall Street on Monday. In afternoon trade, the S&P 500 lost 1% of its previous week's gains after reaching its highest level since early December. As of 1:54 p.m. Eastern Time, the Dow Jones Industrial Average was down 127 points, or 0.4%, at 33,855, while the Nasdaq composite was down 1.6%. The central bank will publish its next rate decision on Wednesday, and most investors anticipate a 0.25 percentage point increase. Following a string of hikes of 0.75% and then an increase of 0.50 points, it would be the smallest increase since March, which would relieve some of the strain on the economy. Intentionally slowing the economy in order to combat inflation, higher rates also cause investment prices to decline. Despite the barrage of rate increases from the previous year, inflation has been declining since the summer, but the economy has also been displaying worrying indicators. Sam Stovall, chief financial strategist at CFRA Research, stated, "I don't think that they have any intention of lowering rates this year." He added that the Fed typically waits 9 months following a rate hike before dropping. No matter which inflationary indicator you look at, they're all traveling in a stair-step downward trend, he predicted. They'll restate that they don't want to recreate the mistakes of the 1970s, he said. This week, the central banks of Europe and the United Kingdom are also expected to announce their most recent rate increases. One of the largest weights on the S&P 500 Monday was the 1.9% decline in Apple. When Microsoft, the only other company's stock that can be compared to them in terms of size, provided estimates for upcoming results last week, concerns about a slowdown in corporate expenditure on technology were raised. On Monday, its shares dropped 2.2%. According to a BofA Global Research, businesses appear to be on track to post somewhat lower profits for the end of 2022 than anticipated. That suggests that the S&P 500's excellent January performance thus far has more to do with increasing sentiment on Wall Street than it has with stronger fundamentals, according to a report by strategist Savita Subramanian. Michael Wilson and his team of Morgan Stanley strategists foresee perhaps more difficult times. The U.S. government will also provide its most recent monthly update on the labor market later this week. Even as housing and other sectors of the economy sag severely as a result of all the rate hikes the Fed made last year, hiring has remained impressively resilient across the board. After admitting they underestimated the pandemic's rise, some major tech businesses have made high-profile layoffs. However, it appears that employment losses are spreading to other sectors of the economy. Last week, layoffs were announced at Hasbro and 3M. Overall, economists anticipate that Friday's report will reveal that American firms created 187,500 more jobs than they eliminated in January. That would be a slowdown from December's hiring of 223,000. Thank you for listening and don't forget to subscribe.